Give us the big picture.
Yeah, so there's been an immense amount of trading. Last week, we saw record volume and dollar volume for all ETFs, and specifically SPY. It traded over $113 billion in a single day. HYG, the high-yield bond ETF, that also traded at record volumes multiple days in a row last week. Saw massive outflows, but there were no issues, really. There weren't many issues that we saw with these types of ETFs. And the other thing we're seeing is that most of this moving that's going around is more from the institutional side. Retail seems to be buying. Vanguard specifically took in a record amount of money last month and last week, more so than they've ever taken with their ETFs in history. And one thing to remember here is that ETFs were kind of built for this type of situation. A lot of people try to say that there's issues and concerns with the way ETFs are built, but they were built in the back of the '87 crash to kind of handle things better than futures did at that time. So essentially, ETFs are handling it very well. There's a few ETFs performing extremely well on the back of treasuries, things like TLT, which are the 20-plus year treasuries, the PIMCO Zero Bond ETF, which is ZROZ, obviously gold, and all those things, low volatility, they're taking in a lot of money right now. But flows, it hasn't been anything ridiculous. We haven't seen too much money going in or going out, aside from money going into those safe haven type ETFs.